I do welcome you back to my YouTube channel. My name is Isma. Thank you for liking, subscribing, commenting to my YouTube channel and all other social media platforms: Facebook, Instagram, Telegram, TikTok, and all other social media platforms, WhatsApp, and forth. Well, in this particular video today, we're going to look at the 10 trading tips from Richard Dennis. We're going to look at the 10 trading tips that we learned from Richard Dennis. First and foremost, before we can proceed, do we know who Richard Dennis is? Well, Richard Dennis is among those prominent forex traders from the 80s, who is probably believed to be among the group of the tattoo traders from Chicago, of course. Now, this guy becomes prominent, of course, after breaking a record of borrowing $1,000 or $1,600, and then grossed this $1,600 for a period of 10 years and grossed it to $350 million US. So he becomes prominent, and I do believe, and I believe you do believe, that is one of these guys, or after Judge Soros, is this other guy that we do probably believe has broken records after Judge Soros. Here we see Richard Dennis. So having lessons from him becomes really something important. It becomes a great advice as a successful trader and a trader who has broken records in the world. So let's see the 10 trading lessons that we can learn from Richard Dennis, and I believe by the time we finish seeing these lessons, we will be in position to have something out of the markets that we actually. I believe by the time you finish this particular video, you will not remain the same, and I believe you will learn quite a lot from it, however short it may seem to be. Well, let's get to lesson number 1 and see what Richard Dennis tells us. Lesson number 1: a good trading system will keep you in the market until there is evidence that the trend has changed. So if you're trading with a trading system, or if you're having a trading strategy, you have to make sure that this trading strategy that you're using will keep you in a particular trend. Like if the trend is upwards, first it has to show you that there is a trend and this trend is upwards. Secondly, it has to keep you in that particular trend. In other words, it should alert you that the trend that you're in is about to finish, is about to end, and therefore it's high time you close the positions that you had and be, of course, ready for the next opposite trend. So if you're having a system, make sure that that system can tell you that there is a trend, and this trend should at least, but this system should tell you the end of this system. That's what we say, or that's why they say that this particular trading system should keep you in the trend and provide evidence that this particular trend is about to close. So it's the system that does that. Of course, that's based upon the indicators, the oscillators, the technicalities that you're using in your from your trading toolbox that may probably tell you, of course, notify you that according to this trend, the trend is yet to finish, and therefore be expective of the opposite trend as due to the current position. So that's what we learned from Richard Dennis. Of course, he talks a couple of things, or he points at a couple of things. Among this is actually a trading system that should provide evidence, that should notify you, that should create observations that clarify that the market is yet to close with evidence. Let's get to lesson number 2. Whatever method you use to enter the trades, the most critical thing is that if there is a major trend, your system must ensure you trade that trend. So have a system that is probably notifying you that this is a trade, like I told you. Of course, the system, of course, you as a trader, you need to know that yes, I'm trading with this system, and therefore, since I'm trading with this system, this is the structure, and therefore I should buy, I should sell based upon the structures of the trade. So it's the system that you're trading has to clearly define that the market you're in is either uptrend or downtrend, such that you can take advantage of this particular trend. Hence, saying that if you're trading with a trading system, trading strategy, make sure this strategy can notify you or can clearly tell that the type of market you're in is such and such, an uptrend or a downtrend. Let's go to rule number 3. If there is any lesson I have learned in the early 20 years that I have been in this business, it is that the unexpected and the impossible happen every now and then. So be mindful of the impossibilities and the unexpected, meaning that anything can happen in the market. Don't be certainly 100% sure that the market is going up or downwards, because anything can happen. The impossible can be possible here. The unexpected can be expected here. So let's not be certain. Let's not limit ourselves when we are trading. Everything is possible when it comes to the markets. Okay, so anything can happen. Don't be 100% sure. Don't be too down on yourself. This is not my thing. Maybe me, I can't make it. You can make it in trading. So anything is possible when it comes to trading. Let's go to rule number 4. Trading decisions should be made as unemotionally as possible. So when you are trading, at least be mindful of the emotions. If you are literally, this particular lesson looks at the emotions. In other words, when we are trading, we should not trade based upon our emotions. We should trade based upon our trading system. We should trade based upon our trading plan and forth. So let's forget about our account balance. Let's focus onto the trading system, because at the end of the day, if your interest is mainly your trading balance, you find yourself having been affected emotion wise. So let's get to lesson number 5 and see what Richard Dennis tells us. Trade small, because that's when you are as bad as you are even going to be. In other words, one thing I've realized in the meantime I've been in this business, usually new traders tend to forget or leave learning how to trade, and they instead come and invest heavily or start with a lot of money in the market, yet they are bad, they are not good, they have really not learned anything about the market. Instead, they are probably sacrificing this lot of money in the market instead of first learning. So make sure you first learn. After learning, start with a small account, probably till when you perfect. If not, you should actually start with the demo account. So don't always start with big. Trade small and gradually increase your capital as you actually also gradually gain the experience and the knowledge of trading. So never trade with a lot of money, and when you are trading, make sure that you should not come in this business expecting to probably get rich in one day, becoming the Tsar of Persia in just certainly a short period of time. And other people do believe that in Forex, it's the only place where there is quick money. That's not the business. That's not the case here. Learn small, then start small, and then gradually upgrade or graduate to one level to another level in terms of your investment and in terms of your knowledge and skill. Let's get to, of course, lesson number 6 and see what Richard Dennis tells us. Remember, is the guy that managed or has broken a record of growing an account of $1,600 to $350 million in a period of 10 years. Let's see as the lesson number 6 of what he tells us as some of the things that he did to upgrade from $1,600 to $350 million. Lesson number 6. I could trade without knowing the name of the market. Well, according to what I know, the way Richard Dennis was trading, he's a trader. Therefore, for him, he's purely a price action guy, probably trading support and resistance, looking at the action of the prices. Of course, not trading with any indicator, purely price action, and therefore this means that he did 80% of technical analysis and 20% fundamental. Therefore, he mainly concentrated at price action. Therefore, he could trade any instrument. That's why here he says, I could trade without knowing the name of the market. In other words, if you're doing price action, don't, okay, of course, when we are doing this, it depends on the style we are trading in, depends on the instrument, it depends on the strategy that we are trading with, the type of trader you are, the strategy that you're using. So for him, it is okay to trade any type of market. By market, is actually talking of different instruments. Okay, for him, he could trade futures, he could trade options, he could trade currencies, he could trade drops on his platform. So, let's come to lesson number 7 and see what Richard Dennis tells us. In the real world, it is not so wise to have your stop where everyone else has their stop. In other words, if you're trading, make sure that you place your stop loss where you're supposed to place it based upon the trading strategy that you're using. So like for instance, if you look at what Richard was trading with, for him, he could literally place his stop loss below the support and above the resistance. And that's why it's really isn't interesting to trade, and of course you close out with a stop loss. So that's why we have to put it in a place whereby we do think that this place is safe, and therefore if it's placed there, the market has to find hardship, it has to find some resistance, of course, closing with this particular stop loss. So place the stop loss where you actually have to place it. Let's get to rule number 8 and see what Richard Dennis tells us. Rather, lesson number 8 and see what Richard Dennis tells us. It's misleading to focus on short-term results. In other words, when you critically look at the biggest percentage of traders are mainly focusing on short-term results. But then he's saying this is really, really misleading. Imagine if all of us were trading based upon long term. Because let's say I can give an example whereby if I'm to go in for a particular, strategy trading for a certain period of time, let's say a year, and then but based upon my trading system, the first 3 months of trading, it's going to be losing trades, and then the remaining time is going to be, win trades. So if I probably focus mainly on a 1 month time result, then I'm probably supposed to lose. Then if I'm not that long-term related thoughts, then I'm probably going to leave trading. Maybe I'll think this system doesn't work. Maybe I'll believe Forex isn't a thing that really works and forth. But then if I try a little to be patient, then I can find myself, survive in those first 3 months, and then, of course, graduate and succeed, of course, enjoy in the remaining months. So when you're trading, at least let's not have, a short-term related best results, but then let's focus on a long-time thing, whereby then we can now, make a lot of money the way Richard Dennis did, because this is the guy that is telling us, of course, what he's telling us is what he did to achieve what he achieved, and hence breaking the world record, and of course one of those few guys that are probably recommended, one of the guys that are of course considered as one of the best forex traders in the world. So let's at least learn from these lessons, and at least do not persist, do not hesitate, to changes, of course, of the lessons that we learn from these particular lessons from Richard Dennis. Let's be, of course, dynamic. Let's change appropriately to what we learn from these particular lessons. As we get on to lesson number 9, let's see what he tells us in lesson number 9. But then don't forget to focus on long-term results. That is having a positive edge over a certain period of time, not short term. Number 9, I learned that a certain amount of loss will affect your judgment. So you have to put some time between that loss and the next trade. So of course there are times whereby the markets are really going to do badly, the markets are not going to be good, everything is going to be bad, you're going to be having a bad day, bad week, bad month, bad year. So make sure when you are trading, at least, and you certainly be this person who is having a bad day, bad hour, bad day, bad week, bad month, bad year. Of course, after having those number of trades where you lose, don't certainly keep on trading. At least rest for a bit. If it's today you've lost, at least leave the market, leave the laptop, leave the computer, leave the phone that you're trading with, and certainly close it and wait it when you are mentally stable, whereby you can't trade when you are emotionally affected. Because the more you do it, the more losses you want to account, the more emotionally you want to trade. Yet we shouldn't trade based upon our emotions. So when you make a loss or a strip of losses, not technically one loss, or when you make 3, 4, 5 losses, at least give a break till when you stabilize, not necessarily the next day, till when you stabilize, then come back, and then you find yourself keeping up to the pace and trading based upon the way you are supposed to trade. Let's get to the last lesson that we learned from Richard Dennis. You could publish the trading rules in the newspaper and no one could follow them, meaning that to follow trading rules is something hard. Let me finish this particular statement. The key is consistency and discipline, you see. So you need to be disciplined. In other words, if someone really can emphasize by publishing the trading rules in the newspaper and no one follows them, this can stress it enough that it is hard, it is very difficult for traders to trade based upon the trading rules. So at least try your level best. Trade based upon your trading rules. The trading rules that we are talking about here is following your trading plan. Whenever you go in for a trade, before, during, and after a trade, make sure you stick to your trading plan and follow whatsoever rule that you've stipulated in your trading rule. Hope you will really find this interesting. May have really found this information interesting, and make sure you, at least before you finish, learn something, note it, okay? Note it, and then also implement it in your trading career. Hope we have learned. Personally, I have learned a lot from these lessons. For more, you can still check about Richard Dennis, or you can read, or you can get books about Richard Dennis, notes about Richard Dennis. I believe you learn a lot from this man. Thank you so much. Hope you learned. I really do sign out. Don't forget to subscribe, like, and share this video on YouTube and other social media platforms, and also comment, like, and share in other various social media platforms of FX Kampala. The links are below this particular video. In case of anything, for those that are really interested in learning how to trade, in learning how to invest, in copy trading, in robots, and a couple of other related forex trading, circumference or things, or lessons, or anything about trading, please use the link or use the contact in this video or below this particular video. Thank you so much. Allow me sign out. Bye bye. I love you all. Thank you.